Last week, the U.S. Department of Labor delivered some not so sparkling news. Inflation had its steepest monthly climb of the year in August. Customers found themselves digging deeper into their pockets for electricity, gas, and other basic products. The Consumer Price Index, a barometer that gauges the cost of various goods and services, inched up a seasonally adjusted 1.6% for the month. Comparatively, it was 3.7% higher than the previous year. Setting aside the unpredictable food and energy costs, the core CPI went up 0.3% and hit 4.3%. Many are popping the champagne, convinced the worst is over. Mainstream media is painting a rosy picture, suggesting we've pretty much outrun the inflation boogeyman. A few hiccups here and there, but apparently we're cruising towards a stable 2%. Paul Krugman of the New York Times is leading that victory parade, loudly asserting that we've conquered inflation with no looming recession in sight. Peter Schiff, the visionary who foresaw the 2008 economic implosion, begs to differ. On his podcast, The Peter Schiff Show, he presents a sobering view, claiming inflation has just taken a short breather and is gearing up for another climb. We bask in the glory of minimal inflation for a considerable stretch, at least as the official charts show. For over 10 years, CPI stayed shy of the 2% mark. Then 2021 happened, with inflation bursting at its seams, which Peter dubs the breakout year. In 2022, even more tumultuous. When peering into 2023, Peter anticipated a temporary lull. If you're into trading, Peter suggests going bullish on inflation. With a recent surge and a minor pullback, now might be the time to buy. Oil prices hit a high of $90 last week, marking an 8% jump in September. And let's not forget the soaring interest rates. Given the U.S.'s substantial debt and energy consumption, these two key components of our economy are becoming pricier. This surge will no doubt cascade onto consumers and eventually reflect in the CPI. In Schiff's words, it's clear as day that inflation isn't bowing out, it's bracing for a comeback. Those turning a blind eye, they're in for a shock, and that includes many investors. Forecasting 2024, Schiff envisions an inflationary storm. He predicts the Federal Reserve's optimistic tune will falter, leading to a dollar nosedive and an economic tailspin. The signs are glaring, one of which is the cost of energy. Electricity prices surged 14.3% in 2022, double overall inflation. Consumers paid 14.3% more for electricity last year on average than in 2021, according to consumer price increase data released by the U.S. Bureau of Labor Statistics. Employment statistics are another indicator. For years, the government has insisted our labor market is fine, so much so that we have hundreds of thousands of jobs that we're unable to fill. A closer look at the data reveals that the number of full-time jobs took another hit, falling by 85,000 to 134.2 million. This comes after the jaw-dropping plunge of 585,000 in the previous month. This means that in just 2 months, we've witnessed a staggering drop of 670,000 full-time jobs. That's the largest 2-month decline we've seen since the early days of the COVID lockdowns in 2020, when a whopping 12.5 million full-time jobs disappeared in just 1 month. There was a surge in part-time jobs. It went up by 32,000. When you add this to the nearly record-breaking 972,000 surge we saw in July, it sums up to over 1 million additional part-time positions in just 2 months. These are just two of the many factors that will push the economy down. His advice: safeguard your assets. We've had a taste of this bitter pill before. Opt for assets that are not tethered to government whims like gold, and don't procrastinate in securing them. The time to act is now.